Hey there guys, today's video is about how to increase your credit score. So let's get into it and let's talk a bit about how you can see what your credit score is first. There's a few websites around that you can see your credit score on. Normally they'll show you your credit score for free once per year. So if you just want to get an idea of roughly where you're at, you can sign up and see what your credit score is, just to see if you've got good or bad credit and where you can improve. So in regards to increasing your credit, there are a few areas that affect your overall credit score. So I'll be starting from the ones that affect it the most. So what affects it the most is, of course, that you pay things on time, you don't have late payments, or you've just completely not paid anything. That will affect your credit score or not. I believe it stays around 6 or 7 years on your credit score. Not the end of the world. Credit score can always be repaired, so don't worry about it if you have bad credit. Next one will be how much credit you use. So if you've got, this is more specific to credit cards, because if you've got, if you take out a personal loan, 30,000, you've got the whole loan, amount in cash. So with credit cards, obviously you have a limit there, and you can use up to that. So they want to see how much of that you're using. So if you've got $10,000, they want to see your score is basically made up around 30% based on this. So if you max out your credit cards every month, even if you pay them off, but if you max out your credit, that's not a good thing. So that will affect your score, and this counts around about 30% or so. So in order to, for this to be a good number, you want to use around 10%. I would say don't use any more than 15% of your total credit. So if it's 1,000, you should just use up to sort of $150 on that particular card. So that's an important one. Now next one depends how long you've been using credit. So if you've had credit cards for 20 years, you've paid off your mortgage, you've paid off car loans, then you're going to have a good credit rating, as long as you've not missed many payments and things like that. So that's one thing they're looking at. If you just open a credit card you've had, if it's your first ever credit card, you've only had it for a month, that's not going to be, it's not an amazing history of credit. It's not a bad one if you paid your 1 month out of one, but they would like to see over a few years. That's important as well. If you've missed payments in the past, if you've had a judgment against you, if you've had bad credit, if you in regards to increasing your credit score after that's been dealt with, just making regular payments and things, even if it's small payments, it all adds up over time. So that's one to think about. Next one will be what different kinds of credit. So obviously there's not just credit cards, there are mortgages, personal loans, credit cards, car loans. There's lots of different types of credit, and this doesn't add up to a huge amount. The most important two are the no late payments and how much of your credit you use, but this one adds up to a little bit. So this is about just that you've had experience with different kinds of credit. Now this isn't that important if you're never going to take out a certain kind of credit, for example. So say for example, you've got a mortgage, but you always buy second-hand cars, so you're never going to need a car loan, or that it's not a huge deal with this. But obviously it's good if you have experience in each sort of area, but I wouldn't recommend you to go and take out a $30,000 personal loan when you don't need it just to improve your credit. That's not really a good idea. You're just paying interest for nothing really. But get yourself credit cards, pay them off each month. I wouldn't really suggest a car loan. I don't think that's a good type of credit to have, unless it's on a business, unless it's a tax write-off. It's just very expensive. So you're always better off buying a car second hand that's 2 up to 5 years old. That'll get you the best sort of return on your money, the most amount of value, with the least amount in sort of maintenance costs if you're getting a vehicle that's used by. So I'm not going to recommend that you go and take out, car loans. Mortgage, most people end up getting a mortgage at some point. Most people want to earn their own home. So most people will end up getting mortgages, but again, just focus on those main two areas for increasing your credit score. So when you want to get a mortgage, for example, or if you do want a car loan, you can get those with sort of the lowest interest possible, so that you're paying as little as possible, really. Another thing that's important is not to try and get too much credit at once. So what actually shows on your credit score that affects it a small amount is each time that you apply for credit. So if you apply for one bank for a loan and it gets turned down, and the next day you apply for another one, and then another one, and so on, that affects your credit rating, because you're being rejected and it's like you're desperate for credit, which is obviously a risky sign that you don't have money and you're not going to be able to pay it back. So be wary of doing too many inquiries into applying for credit in a short period of time. Same thing for mortgages and things. That will also be a credit surge on there. So apply for one. If that doesn't go well, maybe find out why, change a few things, wait a month, and then do another one. You don't need to do 10 different credit checks in a week, for example. That's not going to look good. Obviously sometimes you'll make a mistake and things won't be accepted or whatever, but obviously the best thing to do is just wait a little while, so it doesn't seem like you really need that credit, even if you do. Sometimes we do, but so in regards to boosting your credit score, just a quick summary here. Most important factors are no late payments and utilising a small amount of your credit, of your available credit. So make sure everything's on credit, and also when you do check your credit report, just make sure that there's nothing you've just forgotten to pay and things like that. For example, if you've moved house or something, and say you had a phone contract, you cancelled that. Sometimes with big companies things don't get done. Maybe they didn't even cancel the phone contract, and they've all been recorded basically as if you've never paid any of your payments. I've heard of that happening, and as they moved, they didn't get any of the letters because it was obviously registered, but they thought they closed that that contract there. So it was just constant late payment, and it was for a very, very small amount of money. So there are silly things that can end up affecting your credit that you just didn't realise. So just be aware. These days, most things you can just set up to be automatically paid. So if you have a credit card, put it to be automatically paid, at a certain date each month, and that money will go out. You won't have to actually, because it's very easy to forget to make payments if it's not automatic. So just have them, payments for different things going out of your main account, and then you won't have to worry about it. And most things should be paid, always should be paid, as long as nothing drastic happens. So there's just a few tips there, guys, to help you improve your credit. So thanks for watching. Give the video a like, guys, subscribe, and I'll see you in the next one.